Oh, just have to ask you, did you sell any of your Robinhood shares today? Or do you intend to in the near future? Not a single share.
Not a share.
No plans to do so.
And I love that I'm on a show called Fast Money because I'm the slowest money there is. I made my investment in Robinhood 8 years ago and still holding on, and very excited about what these two guys have done and what they're doing for society. I mean, they got all these retail investors involved in the stock market. The stock market drives all of that incredible value. It drives creativity. It gets people fired up. It gets them all on board to build progress for humanity. I mean, this is amazing. I'm so excited. I'm holding on, baby.
We at CNBC always like to see more people involved in the stock market. That's for sure, Tim. The more, the merrier, we think. But in terms of Robinhood's growth, I mean, Robinhood really caught lightning in a bottle this year. We had the pandemic. We had people with stimulus checks. We had people at home. We had people facing financial hardship, looking for other ways to earn money. All of this contributed to the massive growth that we saw in accounts and in the activity of trading. Why should we believe that that is at all sustainable going forward?
I think once people get the bug and they want to be investors, I think they want to stick with it. It's a great way to put money to work. People go to casinos and every dollar they put in, they lose about 5 cents every minute or two. But in the stock market, every year, they generally, on the whole, they grow 15% a year. And that's been true for 100 years. So I think this is a very positive thing for more people to get involved. And whether it was the pandemic or whether it was just Robinhood making it free or giving fractional shares, whatever it was, it has brought more people into the investment business. And I think that's only a positive.
Aren't you worried about the concentration of revenues coming from payment for order flow? I mean, what is certain here is that payment for order flow, even though it has existed for a very long time, it is something that many of the other online brokers also collect. But for Robinhood, as a concentration of revenue, it is much, much greater. Are you concerned that there's going to be any sort of regulatory action which will endanger that business model?
I doubt that there will, because I think that that the investors, the customers of Robinhood want zero fees. They want zero commission. And if somehow that revenue went away, Robinhood would have to charge a commission. And saying it's concentrated, that makes no sense. That's like saying, Facebook is $1 trillion business and it's all built on advertising. I mean, I think you've got a very well balanced.
But what if we said Facebook's advertising came from 4 customers? Because that's basically Robinhood. I mean, the payment for order flow is from 4 firms. So that is a concentration within a concentration of revenue. It's from a concentrated number of players. And
sure, but their need will not go away. And they will need that information and to run their own businesses. I think that they're locked in, and I think it's fantastic that we've got all these new people out there investing.
Yep, we do too. Tim, thanks so much for your thoughts. We appreciate it.
Great, my pleasure to be on the show.
Tim Draper, Draper Associates. What do we think? What is interesting with this whole phenomenon known as the Reddit phenomenon is that Robinhood has enabled these traders to come into the market, traders who have then opened their eyes to see how the system is set up, and now they don't like payment for order flow. And now they're talking on Reddit about going to brokers that don't rely on payment for order flow as much, Tim. I mean, it's an interesting full circle that we're witnessing.
Yeah, and if you think about the profitability of the firm and where they're going to be tomorrow, look, I think the fact that they have a very strong brand and a very loyal following. Look, if you're any bank or brokerage or asset manager, that's critical. So they've built a lot of that. I think Dan brings up a great point in terms of just how influential or how much size and how much monetization per account. But I think most importantly, where this company is going to also see some issues, at some point this is not going to be a bull market. At some point there's a lot of folks who are investing not on fundamentals and are investing mostly on, call it, a community of mindset that isn't always the best way to do it. And I think that's going to be something that hurts this firm. It's been a very sweet spot. I think they built a brand. They clearly have a business that's sustainable, but they're going to be competing with some of the most sophisticated folks in the world. And that's not going to be easy.
Karen, what do you think of Robinhood?
Well, I don't own it. I think the questions that I would really want to have asked were the ones exactly that you asked about that concentration of payment for order flow and the concentration of the number of the 4 buyers. It's not so much that I think the 4 buyers aren't going to want to buy it. It's, is there a regulatory environment out there coming soon that doesn't let them buy it? But I had one other question. I wonder, is the Robinhood community, are there enough of them that are like, we love Robinhood, we'll pay a commission, that's fine, if they need to keep it at, because Robinhood would need that revenue that way? I don't know. Maybe they, GameStop still trades at whatever, 100 and whatever it is today, 180. I don't think it's really worth that, but, people do. I don't know if they would be helped out like that. I don't get it. I don't get the concentration, the payment for order flow. That's problematic. I think it's so tied to the market. The cryptocurrency exposure seems also, it's turbocharged to the market, which is Tim's point. It's, in a down market, probably won't trade well.
Shepard Smith here. Thanks for watching CNBC on YouTube.